Hey, Fundamentals of Investing kids. It's Mr. Fritsch with this week's materials. I'm uploading them to Schoology in about 10 minutes. Inside the mutual funds unit materials, you'll get the notes, the assignment, the test, which is open notes, and then also the video will be the one that's up top. So you'll have the video, the notes, the assignment, and the test. The assignment's due on Wednesday by midnight, and the test is due by Friday by midnight. All right. The notes, you're going to go over the notes yourselves, but I want to go through some areas that I just want to mention about. So mutual funds. Remember, we keep talking about diversity. Diversity reduces risk in investing. Well, mutual funds is this great tool to diversify. So if you have money and you invested in 2 or 3 different stocks, those 2 or 3 different stocks could all theoretically go bankrupt, such as GM did back in 2009. So what happens with mutual funds is whoever opens up the mutual fund buys a whole bunch of different stocks, puts it into one fund, and then you buy a share of that fund. And then you get a little bit of every one of those stocks that's owned in the mutual fund. So you get instant diversity. All right. And then you can also target, some funds are very broad where they invest in all kinds of different companies. And some mutual funds are very direct in what they invest in. And we're going to look at some of those. But the number one thing about mutual funds, it gets you away from both concentration risk of having your money tied up, your investment dollars tied up in too small of an investment portfolio. And it also helps with diversity. All right. So mutual funds is a fantastic way to reduce risk in your investment portfolio. All right. So that's the concept of mutual funds. Then I go through the different types of mutual funds that you can buy into. We go into advantages first. Advantages. So mutual funds are managed by a professional manager or a team of managers. They pick the stocks or bonds or whatever the fund is investing in. They pick the ones that include in that fund. So you have professional management. That once again, diversification is a definite advantage. Simplicity. You buy the fund and then the managers take care of it. The fund manager takes care of buying or selling specific stocks within that fund. There's a huge variety, which we're going to see. And there's transparency. All right, so mutual funds are subject to industry regulation that ensures accountability and fairness to investors. So mutual funds are highly regulated, which is a good thing. All right, there are disadvantages. If there's active management, if there's too much management, then it could hurt your overall return because there are some fees involved in owning mutual funds. And that's the next disadvantage I talk about, costs and fees of buying into a mutual fund. All right, another one is dilution. It's possible to have poor returns due to too much diversification. Because mutual funds can have small holdings in many different companies, high returns from a few investments often don't make up for much difference on the overall return. Dilution is also the result of successful fund growing too big. When new money pours into the funds that have had a strong track records, the manager often has trouble finding suitable investments for all the new capital that's been put into that fund. All right. Liquidity. You can't sell it anytime right during the day that the market's open because you have to wait until the end of the trading day when all the different investments within that fund finalize. They have their closing price for the day, and then you can sell your mutual fund. But you can't sell it at 9:30 or 10 o'clock or 10 or 12 o'clock. You have to wait until the market closes to actually sell it. All right, and then there are sometimes tax ramifications on mutual funds that you wouldn't have to pay necessarily on other types of investments. And then lastly, cash drag. Mutual funds require a significant amount of their portfolios to be held in cash in order to satisfy people that sell the fund each day. So they can't put all the money to work. They have to keep some of the money in cash so that they can pay off people who are selling shares of their fund. All right, and then I talk about the variety of mutual funds. There's so many different funds. There's international funds that invests in all countries outside your home country. Global funds that invest around the world, including your home country. Sector funds that pick a group of stocks like technology or oil stocks or automobile stocks or athletic apparel stocks. There's so many different sectors out there. You can choose funds in all the different sectors. Regional funds select a specific geographic area of the world. You can have a Latin American fund or a Brazilian fund, or you can have a European fund, a Japanese fund. All right, so all kinds of different regional funds. Socially responsible funds, if you want to invest in companies that do things good for the world, or not invest in companies that sell tobacco or alcohol or gambling or pornography. You can pick funds that just invest in socially responsible companies. Real estate funds, instead of buying properties yourself and managing the properties, you can just buy into a real estate fund. You can buy in the funds that invest in companies that are good for the environment. Anyway, there's a lot of different funds. I don't want to go through each one. There's a good paragraph of information for each one of those. Bond funds invests in just bonds. Equity funds invest in just stocks. Balance funds, I have a few investments in balance funds, which invest in both stocks and bonds in the same fund. So when you buy shares of this fund, you're not only getting ownership in stock, but you're also getting some ownership in company and government bonds. All right. And then we talk about how to buy into it. And then when you sell it, you get what's called the net asset value. Is basically they calculate, they take a sum of all the different investments that are in that fund after the closing prices for the day. And then they take the amount of shares that you're selling and you get that amount of money. But it's based on a net asset value, which is just basically all the shares or all the different prices that all the different investments that are included in that fund close at. And then it tells you right here that you have to wait until after the market closes for the day to actually sell it. And finally, the biggest advantage of investing in mutual funds is that it provides immediate diversification. If you buy shares of funds that invests in the Asian Rim or Pacific Rim, you invest in one that is balanced fund, you invest in another one that's only into oil stocks, you can diversify your portfolio very well by just buying a bunch of different mutual funds. All right. So once I already said it, the assignment is due on Wednesday by midnight. The mutual funds unit assignment's due by Wednesday at midnight. And the mutual fund test, which is an open notes test, is due by Friday at midnight, the 24th by midnight. All right. If you have any questions, please email me. I'll be monitoring my emails all day long from 8:30 until 2:30, 5 days a week. And then I'll even be checking them after 2:30 before I go to bed. So I'll be checking them 2 or 3 times between 2:30 and say 11 o'clock at night. All right. If you have any questions, please email me. I hope everyone's healthy and families are all doing well and you're not getting too bored by all this time home with your families. All right. I'll talk to you later. Bye-bye.